right, everybody. Emily, I'll send it to you first. What was the significance you heard here?
Well, the difficult thing here for Biden, you are often told show, don't tell. But the fact of the matter is that most of Biden's big policy wins over the last couple of years, he can't show them yet. This stuff takes time to be implemented. You got to go through the permits. You got to get the construction. Most Americans, they're not aware of what Biden has done in the last couple of years. They don't know how it impacts them. And so that's really the key for this speech, is to get out there, to tell Americans what he's done, to take credit for the stronger labor market that we're seeing, and then also kind of say that he's going to continue pushing for priorities, a tax on the wealthy, getting rid of hidden fees, things that we know are pretty popular with the majority of Americans. And that's really what Biden has to do with this message, is kind of say to Americans, hey, you might not have noticed yet that the roads in your town are fixed, but you need to know that we have done the investment and that good things are coming.
And Libby, maybe there's three significant things that we can emphasize here, along with everything else that jumps out to you. But number one, we have massive, I shouldn't say massive, we have a lot of fiscal stimulus coming at a time when the Fed is trying to tighten. As he said, we've done infrastructure decade, forget infrastructure week, and we have seen a massive construction spending boom. So that has been an area of significance. Also today, of course, we've had these reports from the Wall Street Journal about a further clampdown on some of NVIDIA and the other AI chips heading for China. Didn't get that detail in this speech, although he did mention chips a couple of times.
Yeah, that's right. I mean, this is obviously a sales pitch for what he has done, to Emily's point, trying to educate voters about the intricacies of really his big three legislative achievements: the CHIPS bill, the Inflation Reduction Act, and then the infrastructure bill, which, as Emily points out, really won't start hitting the economy until kind of 2024, 2025. So he's trying to sort of preview all of those and then also put forth his vision. Now, you know, I don't think that, Kelly, his vision today really sounds all that different from his vision in 2020. It just, maybe he has some more data to support it in terms of the low unemployment, softening inflation, which is risk, because, of course, inflation has been stickier. But I think broadly, it's interesting that he is absolutely embracing, Bidenomics here. He's embracing the economic scorecard, so to speak. And if the economy looks like it does today on the election eve, that will bode well for him. However, there's a real risk, right? Because we still are a year plus in advance of the election. And if the economy does slow, which many folks think it will, especially going into the end of this year, beginning of next year, it could be a risk for him that he is so doubled down on the economic track record. But I think all of the themes that we have heard today, we will hear, very much so for the next 15 months.
Peter, what's most market moving right now? Is it what the administration ultimately does with regards to AI chips? NVIDIA has been under pressure today, obviously, although not even that much, about 0.5% lower at last check. What's the most market moving kind of significance here?
Well, the money is now beginning to be put to work. And you see construction and manufacturing facilities that are hanging in there, and the infrastructure spending that's now just beginning to show up. To Libby's point about seeing the impact in 2024, 2025, we'll also see it'll become more difficult for Jay Powell to contain inflation. The 20 years leading into COVID, core goods prices averaged zero. With a lot of this reshoring and spending on doing things here, that's not going to happen. Inflation is going to bottom out at maybe 3 to 4 instead of 1 to 2, with a lot of it because of this good spending, which means that interest rates are going to stay higher for a while and make central banks' job more difficult getting it back to 2%. Now, will take a couple of years, but that's what keeps inflation higher for longer.
Sure, higher goods prices from all of this, just the continued fiscal stimulus, you could call it, at a time when the Fed is pulling back. So I guess the question is, does the Fed end up still pushing against these developments and trying to get inflation lower and ultimately maybe, more slowing the economy than it would need to or really want to otherwise as a result?
Well, that's the big question, is what sort of tolerance does the Fed have for economic slowing, for a economic slowdown while they're still dealing with inflation?